The real estate market.
Bank of Canada were indicating more interest rate cuts.
We've had 2 years of slow sales.
There's so many things happening. It's just the unknowns make them feel uncomfortable.
Their money is tied up on deposits and the builders aren't building out.
At this time that we're talking, there's 25,000 units that are not sold.
Should I be timing the market?
The sooner you get into the market, the better it is.
Welcome, folks. Welcome to the Mortgage Den. We're here on Friday, February 7th. And with me today, Ken Latif, principal broker at LePage Credit Valley. Ken, welcome to the Mortgage Den.
Thank you, Nick. Thanks for having me.
We're here to talk about a very, very interesting topic that's on everyone's mind these days, the real estate market. So let's go back probably the last 12 months. How's the market been in general?
Well, if we look at the last 12 months, in fact, as a matter of fact, we had the report from Toronto Real Estate Board was released yesterday. So which is a good thing to have this conversation today because it's fresh. And I don't think a lot of people know about these stats right now. Year over year, the real estate market has been up 1.5% compared to last year at this time. And then month over month, we're down 2.5%.
You know, we go back a year ago, we had high interest rates. Rates stayed high until July of last year, and then they started to drop. Did that stimulate the market?
Not by a lot, because the Bank of Canada were indicating more interest rate cuts. And I think a lot of the buyers were waiting until the last one is done. And until today, a lot of the buyers are on the sidelines waiting to see if it continues to drop. Interest rate is one of the biggest indicators, one of the biggest movers of real estate market. We didn't expect what we were supposed to expect on interest rate cuts and consecutive cuts, in fact, the last few times.
We've had 2 years of, slow sales, which means there's 2 years of probably demand sitting on the sideline. Rates have come off a little bit. What's going to get them moving to start buying at this point in time?
I think there is a lot of unknowns, to be honest. The state of the market that we're in right now with so many things, so many unknowns, a lot of the buyers are still waiting. They want to see, they still think that the prices are going to drop, which I don't think it will. Interest rates are where they should be. We don't anticipate interest rates going back to what it was in COVID time. Buyers are still waiting on the sidelines. It's just that there's so many things happening in both countries, in fact, Canada and the US. So I think it's just the unknowns make them feel uncomfortable.
Now, one of the key drivers, to the market is, has been the immigration. However, the government has sort of cut back on immigration over the last year or so. Have you seen that have a major effect on the real estate market?
We had mass immigration over the past few years. So we don't have enough houses for all of these people. Even though we stopped mass immigrations right now, people are still coming in. The legal immigrants are still coming in. And the ones that are still here, they still need a place to live. Honestly, immigration is the main factor, but at this point of time, it didn't make a huge difference yet.
Listings are up a little bit, as you pointed out earlier. Does that mean we have a lot of inventory?
Let's not talk about the inventory because I looked at the report yesterday and it's we have 17,000 properties on the market right now, and it's unseen for it. Went up from last month to now. It went up 148%. So we doubled the amount of inventory from last month. I think it is a good time for people to jump into the market because they have options. But at the end of the day, it's still for some reason a lot of the buyers are on the sidelines. Honestly, it's listings are moving, but because the inventory, the new listings are coming a lot faster than they're being sold, so that's why it continues to rise.
Talking about inventory, builders. I know you deal with builders out there. Are they building? Have you seen a slowdown? Are they nervous about this market? What's happening with the builders?
I saw a report a number of 2 months ago, and it was a builder's report. They normally don't release that report to every brokerage. I happened to find one, and there are about 26 major builders that they actually stopped building. They're halfway done. And they couldn't finish it. The banks are demanding the money. They haven't sold more than 50% so they can fund the bank, and they've actually stalled the construction. And the sad part is a lot of the people have already given the deposit, and they have to wait a long time until somebody else takes over these projects so they can recoup their deposits.
The unfortunate part is their money is tied up on deposits, and the builders aren't building out. So they're stuck waiting for a property that may or may not come. And if it does come, it'll be quite a number of years. Is it the cost that's keeping the builders from continuing what they're doing?
As I said, the builders have 25,000 unsold units. At this time that we're talking, there's 25,000 units that are not sold. So until they sell these units, none of these builders going to say, oh, I'm going to build another building that's going to have another 400 units, and I'm going to add to the pile of 25,000 units. And if they can't sell it, not all of them got the money to build the entire project, so they have to get money from the bank. And I think the requirement for the bank is that you have to sell so many units before we fund you the whole project.
Right.
And that's builders market is not going very well at this point. And if you look at and on that report, I also saw there's 22 and a half months of inventory on pre-construction.
Wow, that's a lot.
Yeah.
In the press as of recent, today is February the 7th, you hear a lot of talk about tariffs in the U.S. So obviously the tariffs that the U.S. levy don't affect us, but if Canada levies tariffs, that's going to affect us. There could also be unemployment. How do you see that affecting the real estate market?
Unemployment impacts every industry. So you know what? One of the major components of real estate is you got to be employed in order to buy a house. And if unemployment rises in Canada or Ontario, I think that will impact the real estate market quite a lot.
Rising unemployment probably pointing to recession.
Yes.
Interest rates go down during recession. If this is to happen, I mean, last time we saw interest rates go down was, 2020, the start of COVID, and we had one of the best real estate booms ever. If rates start going back down the way things happened 5 years ago, do you foresee potentially a bit of a boom in the real estate market?
Oh, absolutely. When interest rates go down to where it was back in COVID time, it's going to go, real estate market is going to pick up. But if we have unemployment on the other side, and then we have lower interest rates, well, we probably would see a balanced market. You know what? I hope we're not going to see tariffs either side because it will impact everybody. It will impact every single individual in both countries. And unfortunately, if that happens, then definitely it will impact real estate.
Your office is in the west end of the GTA. Are different areas affected the same way? I mean, is there some greater desire to move to your neighborhood versus north versus, central GTA or the east? Or closer to the water, the beaches, or downtown?
Well, what we see nowadays, a lot of employers are calling employees back to the office. So all of those people that have moved out of town and were working remotely, they're called back to the office. So they're moving into the city. Whether they're going to move into the condos, probably not. But they come into the city, whether they're going to stay with their parents, family, or they rent a house or an apartment. But we see the population in the city growing, especially in Brampton, the population is growing. So
we talked about the interest rates factor. We talked about the number of listings. I've got some young kids who want to buy. I want to buy. Should I be timing the market? Should I be waiting? Should I be getting in right now? What's your advice?
Nick, this is one of the questions that I always tell my agents. It says you have to be prepared for these questions at any time. What it is the good time to buy is now. I know the past, I know the present, I don't know the future. I don't know what's going to happen tomorrow, whether tariffs going to come in, whether what happens with our federal government, provincial government. I have no idea. There's a lot of unknowns in the future. But what I do know is the stats on the past and today's market. Stats on the past, historically, since 1960, the Toronto Real Estate Board have been releasing these stats. And then if you look at the average, we have had good times and bad times. We've got a number of bad years, but then we had like 5 good years and then like 1 bad year. But if you average it all down, we averages over 6 to 7% appreciation on a yearly basis, even if you go back 40 years, 45 years. So a good time to buy is, the sooner you get into the market, the better it is. If you're, one piece of advice is if you're financially fit, if you're financially able to do it, and that's how you know that you're ready to buy. Most of the people They think that, okay, well, I'm just going to get into real estate market, but I'm just going to do whatever it takes to come up with deposits, to come up with my mortgage payments and all. How long can you run that? Because if you don't have a solid job and if you don't have the monthly payments to carry the mortgage, I don't think it's a good idea to buy. Don't put yourself in a situation, because we're not in 2020 real estate market. So it's not that, okay, well, I'm going to buy it today, 6 months later, I'm going to sell it and it's going to sell for $50,000, $60,000 more. I'm going to take my deposits and then pay everybody off. We can't predict that.
Right.
It can it happen? Sure, it can happen. But you know what? It's unknown, and we can't talk about that.
Ken, you said we know the past.
Yeah.
We know the present. Now I'm going to put you on the spot.
Okay.
Get out your crystal ball.
Okay.
What do you see the real estate market doing over the next 12 months?
Royal LePage is, let's talk Canadian. Everybody's talking Canadian. Royal LePage is a Canadian company established 110 years ago, and they're very precise in their stats and reports. And the report that was released by Royal LePage and the Canadian Real Estate Association, I'm talking about overall Canada, it's going to go up 4.7% in 2025 and 3.3% in 2026. We're talking Ontario because that's where we live. Indications we were down 0.6% for 2024. And the indication is we're going to go up 1.8% in 2025 and 2.5% in 2026.
To me, that seems like, hey, it's a buyer's market out there right now. Prices are not expected to go up crazy like they once did, 4 or 5 years ago. If you have the capabilities, as you've pointed out, you have the income and the down payment, this is the time for you to sort of get into the market.
Absolutely. Absolutely. The good time to buy is today.
You guys heard it directly from Ken Latif at Royal LePage. Ken, thanks for coming in today. And folks, thanks for joining us on this podcast, and we'll see you on the next one.
Thank you, Nick.